Hello and welcome to Startup Street. I'm Arundhati Ramanan, and these are the top headlines that we're tracking for you from the startup world. E-commerce platform Meesho makes a stellar debut on Dalal Street. The stock lists at a 46% premium, trades nearly 6% higher. Market capitalization crosses 75,000 crore rupees on day one. Ride-hailing firm Uber India forays into the B2B logistics market, launches Uber Direct in partnership with ONDC. The service will allow businesses on ONDC to plug into Uber's delivery network, starting with grocery deliveries for Zepto and KPN Farm Fresh in Bengaluru. Amazon pledges an AI investment of $35 billion in India. The commitment is a top-up to the $40 billion already invested in the country. Amazon hopes to generate an additional 1 million jobs by 2030.
$17.5 billion, which is the largest investment we have made in Asia to date, and so we're thrilled about it.
Microsoft CEO Satya Nadella is thrilled about the growth prospects in India. The tech giant has pledged to invest $17.5 billion over the next 4 years. This is Microsoft's largest investment in Asia. Elon Musk's SpaceX is planning to go public in 2026. The company is likely to raise $30 billion at a valuation of $1.5 trillion. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Moonrider, the Bengaluru-based electric tractor technology startup, is powering into its next phase of growth. The company has raised $6 million in Series A funding led by Pi Ventures, with participation from Singularity AMC and existing investors. As the global electric tractor market accelerates in India, the world's largest tractor market hits an inflection point. Moonrider is betting on an EV-first platform that cuts farming costs by up to 80% while matching diesel tractors on upfront price. To decode the scale-up, the deep tech engineering, and the roadmap to transforming farm economics, I'm joined by Anup Srikantaswa, founder and CEO of Moonrider. Anup, thank you so much for taking time out and being here with us on Startup Street. You know, you are an electric tractor company, right? If you could sort of take us through the products that you have on offer and what's the gap in the market that you're trying to solve for?
Absolutely. Thank you so much, Arundhati, for having me on the show. What we do is we build electric tractors from India for the world. So this whole idea of building an electric tractor was originally came to us from one of the progressive farmers while we were having a coffee conversation. So what we do is we build electric tractors, which are in 3 different form factors, which is like 27 horsepower, 50 horsepower, and 75 horsepower, which in some sense caters to the complete market that we have. So at the core, the problem that we are solving is bringing price parity with the diesel tractors. So which means that all our electric tractors will be priced more or less on par with the diesel tractor, wherein the farmers and the farming community will get the benefit of the upfront cost as well as the running cost, wherein the electric tractors are way more cheaper than running a diesel counterpart.
Sure. And you know, you built an EV-first platform instead of sort of electrifying a diesel tractor, right? So what are the key engineering breakthroughs that have sort of helped you achieve true price parity with this?
Absolutely. No, I think that's a great question. So 50% of the vehicle cost is actually at the battery. And what happens is if you look at India as a market, which is mostly 2-wheeler and 3-wheeler market, right? So the kind of components that are available in the market is like generic EV components that wouldn't solve for the tractors, because essentially the 2-wheelers and 3-wheelers are built for speed, whereas tractors are built for high torque applications. So essentially we had to build everything grounds up, which means that we have a patent on what we call the refrigerated battery packs, wherein for the 75 horsepower tractor, you can charge the entire tractor in 30 minutes. So we had to go with first principles to sort of solve for the thermals around it, which has brought back the cost significantly. And the power electronics, the motors, the powertrain, everything associated with the electric tractors, we have purpose built it. So from engineering to design to sort of assembly, everything happens in-house in our facility, and that has led to the price parity.
Sure, and you've raised the $6 million, right? If you could sort of take us through how you plan to deploy this fresh capital and what you plan to do with it immediately.
Right. So I think for us right now, the focus is, we are the only tractor manufacturer in the world to have received the regulatory approvals for all the three form factors, right? So we've got the approvals from NETRAX as road ready. So as we speak, we are doing customer trials. One of the main objective of this fundraise is also to get the first 100 tractors right. So our focus has been that now post customer trials, we'll start selling those tractors. We've made significant partnerships. So to get the 100 tractors right, and then beyond scaling it up. So that's primarily the focus.
Sure. And, speaking about that exactly, how soon do you plan to transition from these pilots to full-scale commercial rollout? If you could take us through the rollout timeline and the kind of partnerships that you have for your deployment as well.
Right. So over the course, so starting from February 2026, we will start the commercialization. So we don't sort of open dealerships, Arundhati. So what we do is we are partnered with what we call Uber for tractor models, which is nothing but the large rental fleet owners, so to say. So we've made one partnership in East Africa and three strong partnerships in India. Over the course of next 3 years, they can consume more than 6,000 plus vehicles from us. And these are exclusive partnerships as well. So that's our focus, to get these 6,000 tractors out.
So the focus is to get these 6,000 tractors out, and you're eyeing global markets as well at this point. All right, Anup, we're completely out of time, but thank you so much for taking time out and being here with us on Startup Street.
Thanks again for having me. Thanks.
And moving on, Uber announced that it has forayed into the B2B logistics space with the launch of Uber Direct, powered by the Open Network for Digital Commerce Network. The company also announced the launch of metro ticketing on the Uber app in the city as well. This will also be done through ONDC. My colleague Ritu Singh caught up with Prabjeet Singh, the Uber's president for India and South Asia, to talk about this foray and their plans to expand into logistics solutions for food delivery as well. Take a look.
I think ONDC is actually democratizing digital commerce in ways which I don't think many other geographies globally are able to do. So by launching Uber Direct, which is our B2B logistics service on ONDC, we are able to participate in part of the marketplace which we do well, which is a very large network of drivers, 1.5 million plus active drivers on the network, which can now start getting demand, which ONDC has already cultivated through with medium or large size merchants on the ONDC network. And that allows us to participate in that opportunity immediately. So we see no reason why at this stage we need to be creating and participating both sides of the marketplace. Same way with ONDC, we have participated on the mobility side, where there are multiple metro networks which have come online. And we have opened up our demand base to access those. And we are seeing fabulous feedback from our consumers on when and why they buy metro tickets on the Uber app.
Well, for businesses that are partnering with Uber for logistics, how will the pricing and margins work, for instance, compared to other third-party logistics players?
At this stage, obviously, there's an early evolution of the service. There is a predefined framework which we participate, where there will be certain pricing and delivery SLAs which we will commit to, which will be available to any merchant which is trying to participate. And they get a choice to pick the logistics service provider based on those parameters. And our job hence comes up to making sure that our network is most efficient, most affordable, and has the least amount of defects. And the more we do of that, it will organically then encourage merchants to opt into using Uber through the ONDC.
Just to be clear, from a viewer point of view, you of course have Uber Courier, which is more consumer facing. And then you already have Uber XL, which is again B2B in terms of couriers. So this Uber Direct that you're now launching, is it only going to be, say, limited capacity two-wheeler rides? I mean, how is it different from Uber XL?
I think the way to think of this is on the consumer side, you can open the Uber app and request, if you want a small package, use the courier service. You also get an option of Courier XL in some cities if you have a large package. We have seen many consumers shift furniture, and then there we then offer a different form factor. But the whole experience you can do through the Uber app. What we're doing with Uber Direct, which is a logistics layer, you actually don't get to see Uber because the merchants are choosing which logistics provider they use. But we are able to still tap into the efficient fulfillment layer which we have built. So here right now we are starting with two-wheelers, but as this will be more driven by what our merchants want. If our merchants want us to add bigger vehicles on the logistics network, we will start building those out also over a period of time.
You know, interestingly, you're also planning to foray into the food delivery space. And to be clear, again, that is B2B. You know, there's no Uber Eats-like model again. But, you know, tell us again, restaurants have their own logistics partners that have already been set up. Then, of course, you have the two big players in the market, Swiggy and, you know, Zomato. What is your ambition in this space? And, you know, why would restaurants go to an Uber when they already have the system set up? They're partnering with the likes of delivery and whatnot.
I don't think we are right now trying to participate in the same operating space where other food delivery players operate. I think what we are trying to do is for merchants, including restaurants, which are trying to, which have their own consumer base and are generating demand on their own ecosystems, might be apps or websites, and they need a credible logistics partner. We are fulfilling that very specific last mile need. My sense is there will be multiple ways which consumers will order food or order groceries or pharmacy over a period of time. And we just want to be the logistics provider based on different use cases.
But, you know, is there a lesson you got from Uber Eats, which eventually had to be sold to Zomato, at least from a logistics point of view, that you're going to apply to Uber Direct and, you know, perhaps be more successful here?
I think the lesson which we have is actually more from our global presence as a very large delivery ecosystem. Today, we globally offer not just food, but grocery, when we also offer this Uber Direct services in multiple geographies. So we have truly figured out when it comes to enterprise or mid-sized merchants, the SLAs they care for, their appetite for pricing, their what kind of error rates we want to minimize, how to minimize that, how to make sure that the right dispatching algorithms and routing algorithms work. So I think there's a lot which we will have, which we are going to bring to the market, and that should give us a reason to differentiate and improve. I think, and then you bolt on top of it the mobility network which we have built in India. Remember, we have more than 1.5 million active gig workers who are already using us. A very large number of them are two-wheeler drivers. So you have this large base. On day one, you can open those up, train them to carry this service. And between this technology and this network, hopefully we are able to create a compelling proposition for everyone on ONDC and beyond.
Well, 12 years for you, for Uber in India, 3 billion rides, 125 cities. We're closing the end of 2025. What does the coming year look like? What kind of scale are you expecting from here?
Not doing crystal ball gazing, but I'm hoping to be in more cities, expand our driver base significantly, and deepen our services in all the categories from intercity, intracity ride hailing, bikes and autos, shuttles, because there's just so much headroom. So hopefully grow our business multiple times over.
On that note, it is time for us to head into a short break. But coming up next, CoreOps.ai backs $3.5 million to scale its operations. We speak to the firm's founder on the other side to find out more. Stay tuned.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. You're still with us on Startup Street. Enterprise AI is entering a new phase, one where large companies are racing to modernize legacy systems and build AI-native foundations at scale. And CoreOps.ai is positioning itself right at the center of that shift. The deep tech startup has just raised $3.5 million in a pre-Series A round led by Sienna Capital, with participation from Kettleborough, Aurora Venture Partners, and marquee angel investors. To understand the scale-up, the technology, and how CoreOps.ai plans to build the enterprise AI operating system, I'm now joined by Rajiv Srivastava, the CEO of CoreOps.ai. Rajiv, thank you so much for taking time out and being here with us on Startup Street. You know, before we get into the fundraise, take us through what you have on offer and what you're basically trying to solve for.
Thanks for having me, Arundhati. At CoreOps, our mission is to help enterprises modernize their legacy systems and deploy AI at scale, faster, safer, with real business impact. Now, today, most large organizations really want to deploy AI, but they're held back by three very distinct problems. One, the fragmentation of data, which is all pervasive; legacy technology, which doesn't allow customers to move on to the more newish tech; and then complex operations. Now, our platform, Agent Core, Data Core, and Core Side, the three together solve this by bringing modernization, automation, and intelligence together. So one single platform that takes care of the issues of the enterprises.
Sure. So one single platform to take care of all of these issues and automate them. You've raised this $3.5 million in a pre-Series A round, right? So what are the top three areas this capital will immediately accelerate for CoreOps? Yeah,
look, this round of funding will literally give us the fuel to accelerate the next phase of CoreOps.ai's growth. And three immediate priorities. First, we are strengthening our engineering and product organization. We are expanding our AI, data, and modernization teams to accelerate innovation. That's one. The second is we are scaling our AI native platform globally. We are investing in R&D, we are investing in cloud partnerships, and in platform reliability, so that enterprise customers anywhere in the world can literally modernize, automate, and deploy AI with confidence. And the third is we are deepening industry-specific solutions. We are focusing on four verticals: manufacturing, BFSI, retail, and healthcare. The sectors where modernization and AI adoption are urgent, and value creation is actually very significant in these four sectors. So those are the three areas in which our capital is going to get deployed.
You know, like you said, your platform has already delivered 20+ enterprise AI use cases across manufacturing, BFSI, retail, and healthcare, which you pointed out are your four key core sectors, right? Where are you seeing the strongest demand for AI native modernization at this point? Any new sectors you're looking to enter as well?
I think any sector which is very heavy on data consumption or generates a lot of data is a logical entry point or logical point for AI solutions to be given or provided. And we are seeing traction across very simple, very 3 or 4 use cases, which are very intensive use cases. One is in medical imaging, disease prediction. That's a very big use case for AI. The second is on product innovation and acceleration. How companies can use the latest technologies of AI to just simply accelerate the product that they are going to create for the customers and next. The third is on just demand forecasting. I mean, you have historical trending, which customers can then utilize with a few more parameters built in to predict what their offtake is going to be in the future. So demand prediction, demand forecasting is a big deal. And then you've got just the whole element of how you optimize the code. So you can develop code much faster, which allows companies to become far more efficient and service-oriented as you go forward.
And if you can take us through the revenue story, what are you currently clocking and where do you sort of hope to end this year? Also, what's the revenue mix and how big is the India market for you?
Right now, this is the first year of our operations, Arundhati. So our plan is to do $1.5 million in this year, and we are well on course to accomplish that $1.5 million. This is coming across, like I said, the set of customers that I talked to you about A few of them are real marquee, big global Fortune 500 companies, which we are serving and servicing from India. And then a lot of them, a few customers are also our largest names in India as well. So that's the way in which we are seeing our revenue split. India versus overseas for this year will be 80-20 sort of a ratio. It is largely a product plus a services story. So we are basing ourselves on product, and that allows us in the future to get into a very, very strong growth, because product allows you to have that multiplier impact of growth. So over the course of next couple of years, we really want our customer base to triple in the next 18 to 24 months.
Sure.
We want our customer footprint to triple. We want to expand globally in Middle East, North America, Europe, and some of the Far East countries where we already have sales associates helping us.
So big expansion plans there. All right, Rajiv, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best going forward. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
"26 years of CNBC TV18.